all professional.
Hey, this is Colin Nathan Aleem, the real estate boy, and welcome to Real Estate with Soul. This is going to be some episodes or live streams that I'm going to be coming to you with every Wednesday, God willing. And what I wanted to do is I want to focus on lives of Black real estate professionals. So today we have Sahaad Washington from Movement Mortgage. Welcome, Sahaad, to this ain't a podcast. What is this? A live stream. Welcome to the
Yeah,
live
we
stream.
call it a live stream. Yeah. Hi, thank
Cool,
you.
cool, cool. I've been working with Sahaad now a few years, and I wanted to bring her on because she's definitely a detailed um, MLO, which stands for Mortgage Lending Officer. So let's start with your background, Sahaad. How did you become a mortgage lender?
So I'm an MLO, mortgage loan originator, and I got
Okay, I got all that.
into mortgages. I actually started working in commercial credit for Dun and Bradstreet. Then
Oh
I
wow.
went over to auto loan originations for vehicles. And I knew that I wanted to do this for homes. I don't want to approve cars. I want to work for homes. So I tried kind of, relentlessly for several years to find somebody to bring me into mortgage, and it was a lot harder than I thought it would be. I thought that I could just go and sign up to be a loan officer, and that really wasn't the case. Eventually, I ended up going under a top producing loan officer that worked in the Eastern Main Line in Pennsylvania, and she allowed me to come on as her junior LO and taught me over the next 18 months or so really how this business works, how to do loans, of course, and how to put together great deals.
Now, what's the process of becoming a loan officer? Because I'm just thinking like they just throw as many people up against the wall and see who sticks. What's the process of becoming a loan officer?
So there's a couple different ways that you could do it, and I'll be honest with you, I don't know all the routes to get into this game, but I know the one that I took. I went through a bank that had a mortgage department, and I found a loan officer that was willing to pull me in. I definitely tried. I asked my management, "Hey, how do I get to mortgage?" And they just were like, no, you don't want to do that. Or, no, it's a really difficult industry. Like the door just kept getting shut. Like they didn't want to bring me on. So if there is a traditional route to become a mortgage loan officer, that was not my experience. I had to beg. And fortunately, I got somebody who was experienced and pulled me in and agreed to train me. Now, I know you can seek out training. I know you can apply with mortgage companies and they sponsor you and
Mhm.
they, get you your training and your licensing. But I went through the bank.
Gotcha. Now, because you had experience in the past as far as mortgages, not mortgages, but lending as far as the auto loans, let me talk about that. What happens when somebody goes down to the dealer and then they come back with eight or nine inquiries on their credit report because they wanted to get a car? What's the deal with that?
So the way that the way that dealership works is the finance manager will connect that dealership with multiple different lenders so that they can shop you to whoever has the most competitive interest rates for the vehicle that you're looking to purchase. So, for example, you may go to buy a car, right? You may have been
Mm,
approved with one dealership, but if they have four or five, the dealership in most cases is going to select the lender that has the highest interest rate or whoever they're going to make the most money off of. And if you accept it, that may not really be the best offer. I
mm.
will tell everybody, if you go to buy a car, don't ever take the first offer, because 9 times out of 10, it's not the real offer. It's not the best that they can do for you ever.
As far as the car. Now, when you say that, you mean as far as the car, like, hey, we got this car for 17,000. You're saying don't take
Rates.
that one.
I'm saying interest rates specifically. Pricing for
Okay.
vehicles, that's not my area, but
Okay.
interest rates, right? Remember, they're in business to make money. They make
Right.
money off of selling you the vehicle and then also off of the interest that you pay on it. So it may be the dealership's prerogative to get you to take a higher rate so that they can make more money, not the lender coming in and saying, hey, this is the best I can offer, but there's might be 10 different lenders saying, hey, this person is approved, this is what I can offer, and then the dealership will go and cherry pick what they're going to offer you. So if you take it, there could have been something better there, but you just didn't ask for it.
Gotcha. I think a better route, I usually advise clients not to get financing from the dealership at all, but go to their bank or go to their credit union and get pre-approved with them first and go down there with a check versus trying to get financing through the dealership. What do you think about that?
To each his own.
Okay.
For me personally, I'm always going to get financing through the lender of my choice. You're not pulling my credit 100 times, but to
All right.
each his own. If you're going in, you're buying something extremely expensive, dealership financing may be able to offer you the best incentives, but it all depends. Depends on everybody's situation is different.
I was going to ask you, what's the upside of getting finance from a dealership? I mean, you answered it partly there, but
Incentives. Yeah.
okay. So they'll give you, I mean, what's an example of an incentive that they may give you for
Um, I mean, it depends. I didn't work in car sales when I was at
sales?
the
Gotcha.
dealership. I just worked in loans, so I don't know all of it,
Okay.
but they gotta offer things to you.
Okay. Awesome. Well, let's move on from the dealership.
Think of it like a builder. Think of it like a builder for a property. A lot of
Mhm,
times will offer incentives to customers if you use the builder's financing and don't come in with your
mhm.
own. They,
Gotcha.
we'll give you a credit for this, or we'll give you extra things, right?
Mhm.
I can give you money, but I can't give you a new set of cabinets unless you're
Right,
doing a
right,
rental. So,
right. That makes sense. That makes sense. Well, let's skip past that and move to your journey as far as being a mortgage lender. Now, when you first got into the business, what are some things that you experienced? Was it tough? Was it easy? Was it everything that you expected?
no, it was nothing like what I expected because when I came in, I knew from the beginning that I was going to be committed to serve the community that looks like me. I was on a mission. And I learned very, very quickly that depending on who you're working for, even, just all across the board, not everybody has the same mission. And it's
Mm,
extremely difficult if you decide to work in some types of niche markets, depending on the company that you're with. So it was a rude awakening that I thought I was going to come in there with um, my cape. I'm going to save the community, and
right.
then really starting to understand the challenges that a diverse or low to moderate income community faces, and then also experiencing the challenges that I faced as a loan officer just trying to get financing for low to moderate or diverse communities. It always felt like there was a difference in how each client was being treated based on how much money they had and what they were trying to purchase. And I can remember early on, like very early on in my career, and this continued over the course of 3 years, hearing the statement, you don't want to pigeonhole yourself with only
Mm,
doing one type of deal. And from the outside, that sounds like, have a variety of different type of products and programs that you offer. But what's really being impressed upon you is those type of loans are difficult. Those type of loans are small, and those type of loans are not worth our time. So my name and license is on here. I'm sure if somebody Googles me and goes and looks me up, they know they can find out who I work for. I'm not going to say their name, but I will say that it was extremely challenging at the beginning of my career. And it always felt like it doesn't matter how much you know about mortgages and how many guidelines you read. If the company and the operations team and management does not like the loan, you will feel biased towards that whole process. So
mm,
not only was I a loan officer and still am, but you become an advocate, like the wall of defense. So instead of just, hey, this is a loan, I can see that you're approvable. This is how we're going to structure it and put it together, right? I
Mm-hmm.
now am not even overcompensating, but I'm now thinking like an underwriter, which you should do anyway. But I'm thinking worst case scenario. Okay, what could they possibly say about this customer? What could they possibly think? What could they criticize? And I'm going so deep, so deep. And I learned later that that's not the real process, because when you do different types of loans, a person that comes in with 20% down, excellent credit, is a different type of client. I'll just say that, and I think you know what I mean.
Mm-hmm.
They don't face the same challenges. They're not even questioned on the same. This doesn't look suspicious to me. But for
Okay.
the other type of client, there was 50 million questions about it. So you can feel it, even if it's not being shared, like verbally stated to you.
Verbally. Right. Now, question, because you've worked for a bank and you've worked for a mortgage company. Is that type of attitude present in both systems?
It can be. So what I'm saying, where I'm at right now, I know that I have found home, but it took me several different institutions to find my home, as far as what aligned with my beliefs, culture, and just overall being ethical in more than fair, having a can-do attitude. It can be different wherever you go. And a lot of times as a loan officer, you have people that will come out, recruit you, and pursue you. Hey, we want you to be there. We want you to serve the diverse community, or we really want to bring you on. These are salespeople. They want you to come work for them so that you can make them more money, right?
Right.
And they may not be committed to what you're committed to at all. And you don't find that out until you start working with the people that sit behind the desk and in the call centers and, off in a different location. And a lot of times you don't even get to see them face to face. That's when you really find out who you're working for and how they operate, what's
Right.
happening behind the scenes.
Right. That's crazy, because I was just reading or listening that of course we all know about redlining. And since that time, the government has been forcing banks to go into or setting up programs like your FHA loans for individuals who normally cannot qualify for a loan. But if
Well,
you
not necessarily
do,
FHA. Sorry, I don't mean to interrupt you. I just want to clarify so that
okay,
FHA is a government-backed program. The
right,
programs that you're talking about are Community Reinvestment Act. So when you see in-house programs that banks offer, you know, maybe a lower down payment or maybe looser restrictions, programs that would not normally be offered, these are like special in-house programs, and it'll say like community lending or Community Reinvestment Act, CRA programs. Those
right.
are
But
Mhm.
correct me if I'm wrong though. But the FHA program was started so it could promote home ownership for individuals who normally couldn't qualify for a loan. Is that true?
FHA is the government loan that has a little bit looser restrictions around
Right.
credit, and it came out of the National Housing
Okay.
Act in the
Correct.
30s.
Exactly.
And don't quote me on the exact date, but it was a
Right.
result of the National Housing Act.
Correct. So in that same light, if you take a look at lower income communities
Mhm.
and you take as far as them being funded, actually mortgage companies have done better, fared better, and have done more approvals than banks
I don't know the
historically.
exact I don't know the exact statistics on that, but I can tell you why it's easier, right? So I don't want to, I can't fact check all of your information, but
Right.
I can say a lot of times what banks have when they provide those specialty in-house programs is they have what's called overlays. So this is exactly what it sounds like. It's another layer on top of the guidelines so that the bank can assess risk. So we will offer this program to you, but instead of you having to have a credit score of 620 to be conventional per Fannie Mae and Freddie Mac, we are going to require you to have a 680 to do this program with us. That's an overlay. So it's a smaller set of rules and guidelines on top of the real guidelines. So it makes it harder sometimes to be qualified for them, but banks are in the business of making money. So it's a way that they protect themselves. Like, yeah, we're going to offer this program, but we also want to make sure that we're offering it to qualified individuals. And we're going to determine how they're qualified by adding this overlay. Does that make sense?
It does.
So it's at
It
the
does.
discretion of each bank.
Okay. So as a loan officer, you're pretty much running your own show, or is it that the bank, like what type of support does a bank or mortgage company give you?
Well, that depends on who you work for. Because I've worked for places where you know, I've had no support whatsoever. And I've worked for companies where they overly support and help you grow your business and make you become the best that you can be. So it really does depend on what who you work for, but also it depends on your production as a loan officer. So I have a loan officer assistant. When you start producing and you're doing a higher volume, a good company is going to give you an assistant to help you manage that so that you can provide the same level of service to all of your customers without getting, overwhelmed. If you're not producing, then you may be on your own until you start producing a lot. So that's an additional support. You can have a loan officer assistant. You also have teams. You have processors. I know loan officers that have 2 and 3 assistants. I know loan officers that have an entire team and underwriter dedicated to them because of the amount of business that they do. It depends on what support that loan officer needs and their production. That's the honest answer. So,
Right, right. Now, when you're a MLO, do they give you, I guess, instructions on how to be a business owner?
well, they teach you or they encourage you being a loan officer. And again, this depends on where you work, because if you're a loan officer that works in a call center, you have a set schedule. If you're a loan officer that works in the bank, you work on the bank's schedule. If you're a loan officer that works for a remote company, you might have to be on the clock, right? You could be a loan officer like myself that operates very much like their own business, and I pick and choose my hours. So if I'm not starting my day till 12 noon, which never happens, then I'm not starting till 12 noon. There's nobody that comes over you and says, you're required to work a set schedule of hours when you operate like you're your own business. But it's going to be different based on who you're employed by.
Okay.
So, for instance, you have loan officers that are 100% commission like myself, where we only get paid and compensated when our clients get the keys to their home, similar to how you get paid as a realtor. You
Right.
have loan officers that get a little bit of salary and some commission. You have loan officers that get full salaries and no commission. It really all depends. It's very different. So, all loan officers are not created equally. And yes, we're an MLO, but depending on who we are employed by, that's going to determine, how we get paid.
Cool. Now, what's the pay structure? How do you get paid as a loan officer? I know it varies because, like you just said, some are 100% commission, some are split, and there's some folks that are on salary. So, of course, not the salary folks, but how does a mortgage loan officer get paid in general?
So other than what I just mentioned, if you are commission only, you get paid based on the amount of loan volume, and that can fluctuate based on what you negotiate and what they're offering. So again, It depends.
Depends. Right, right. But is it where, for example, if somebody's on a commission, are they getting 1% of the loan? I know sometimes it's negotiated, but in general, like a fresh person coming off the street, would they get 1% of the loan, 2% of the loans, 5% of the loan?
It depends on who you're employed by, because it is
Okay.
going to be different for everyone. It's going to be different based on the loan officer's production. It's going to be different based on the loan officer's volume. If they specialize in one area, there isn't one way to say, hey, if you start a job as a loan officer,
Right.
this is about what to expect. It depends on who you work for, and it also depends on how good you are, because like realtors, right? You can go be a realtor and have your real estate license, right? I know realtors that and that don't close a single transaction in a year. They're still a realtor. You have loan officers that may not close a single transaction in a year. They're still a licensed loan officer. So it depends.
Right. I guess what I'm getting at is, for example, like a realtor. If a realtor sells a house, now again, in real estate, I want to preface by saying this: in real estate, everything is negotiable. Everything is negotiable. People tend to pay around approximately 6% if you sell a house. That's what you're going to pay to a realtor, and that's going to be for the buyer's realtor and the seller's realtor. But again, that's an approximation. Like it all depends. Everything in real estate is negotiable. So I guess from looking at it from a loan officer, I've always wondered personally, like, okay, do they get 1% of the loan? Do they get 2% of the loan, or exactly what's the approximation?
So again,
I'm gonna get
and I'm
somebody to
not
answer
avoiding
me.
your question, but the true answer is it is going to depend. If you're your
Right,
own broker, you're going to get paid a different set. If you're commission only like I am, you're going to get paid something different. If you're a salary loan officer, you could get paid something different. There is no, hey, I'm going to be a loan officer and this is the average pay structure to expect. Everything is negotiable.
gotcha. So can I get 100% of the loan? No, it's not that. All right, what's the range? What's the range? Is there a range?
So no, because you could come in again, you could come in as a loan officer. There's no guarantee that you're going to be successful. Like this is a perfect example right now in the market that we're in. Realtors too. This is the type of market that's going to make or break you. You better really know how to do your job in this market, otherwise you might not be here in 6 months. You
Right.
could
I get
there isn't.
what I,
There is the answer is there is not a range. The
right.
answer to your question is it was going to depend on who you get hired by, what pay structure you select, and then also what how you negotiate your pay. There is no range. You could come in and literally make zero.
You can make zero, but if you do $100,000 loan, you're not getting $50,000. I guess that's
No,
where right. I guess that's where I'm trying to get at as far
but
as
it depends on what the company is. You have like there could be, for example, you could be a salary loan officer, and they could say, okay, for every loan that you close, we're going to give you 150 bucks, right, on top of whatever your base salary is. Okay, so for one type of loan officer, you could get 150 bucks for every loan that you close, right?
right,
For every loan that you close over 300,000, you could get 350 bucks. Who knows, right? On top of your base salary,
right,
something like that. You could be a little bit salary and a lot of commission. Hey, we guarantee we're going to give you at least $10,000 a year, right? Everything after that, you're on your own, or you have to pay
mhm.
us back for the 10,000 that we gave you. Okay? You could be straight commission, which is you get what you put in. Whatever you produce, we're going to pay you X percentage on it, or we're going to pay.
You freezing up there. All right, maybe we lost her. Did we lose
No, I'm
her?
here.
Oh, okay.
Yeah.
Because you're
There is too many
it's
variables
true.
to say this is what the average loan officer makes. Now you can Google it, but I'll tell you this. The first year that I was a loan officer, the first year, and I
Hmm.
knew that this was going to be tough, I
Hmm.
think I might have made like $18,000 for the entire year, right?
Right.
The following year, I cannot disclose what I made, but I made it. And then it's gotten things have gotten much better since then. But
Right.
I took the route. I came in and jumped straight into commission only. I just
Right.
no breaks. I want to whatever I put in is what I'm going to get out. That's
Right.
scary for a lot of people. Some people like, you know what? I want to learn the business this way until I get good, and then I'll branch off and on my own. Some people never branch off into doing it 100%. If you close no loans, you get no money. Some
Right.
people, you know,
But if you do close a loan, you get more of the pie than if you're. And the reason I'm asking this is because I do tend to find with these big banks, a PNC, um, Bank of America, some of these big banks, and it's like even if we have like a nice deal, they're really not calling back, if you would say. I had one time where I had a guy who was buying like close to a $400,000 property, and this loan officer from this big bank just would not call us back at all. And this guy was grade A paper. He was grade A paper as far as credit and as far as his occupation also. So everything was there. The loan was a grade A file, but this person would not call us back. And my theory was always, okay, well, he probably looking at this little $400,000 property where he got millions because he works at the bank. So that was my opinion or my hypothesis with this person. That's the reason why this person just wouldn't call us back. It didn't make anything else didn't make any sense to me.
so like I said, all loan officers are not created equally. Now, I know a lot of great loan officers, very driven, very hardworking, that work at banks, that receive salaries, that are very dedicated to their craft. I also know some loan officers that the check is coming no matter what. So whether you close your loan or you don't close your loan, my paycheck is coming every other Friday no matter what. So a person that works like that who knows the check is coming no matter what
Hmm.
is not going to have the same sense of urgency, right? That they have to close this transaction. Whereas for me, if I don't close a loan, I make $0. If I don't close a loan, my son doesn't go to, pilot academy. If I don't close a loan, I don't pay my car note,
Right.
similar to what you are. So the realtors that hustle, hustle, hustle are the ones that are full-time realtors. This is not their part-time job. This is 100% what they do. This is their craft. You guys know, because you're a full-time realtor, if you don't close loans, you're not going to
Right.
be able to feed your family. If
Right.
you had a full-time job and this was only your part-time job, right? Real estate, it's great for extra money, but you have your regular full-time job. You know that there's money coming no matter what. It can be the same way if you are a MLO or just for any industry. If I know no matter what, my check is coming, if I am that individual, right? And
Hmm.
things are getting difficult, or you know what, I'm busy. Am I going to have the same sense of urgency for you and for a customer if my check is coming no matter what?
Definitely not.
All right. So
Definitely
here's
not.
the answer to your question.
Definitely not. Um, let's move to the I call the black round.
The black.
Um,
I like that.
the black round. What challenges have you come across as far as dealing with your community? Okay, what challenges have you come across being a loan officer?
With my the black community,
Right.
there is a sense of fear. Um, if nothing else, and I'm gonna keep this positive. We are not downing our community, but there is a real sense of fear there within the black community of I am afraid to try and buy a house, whether it be because no one in my family has ever bought a house, not feeling worthy like I deserve ownership of something, having people around you saying that you can't do it, the history of how Black people have been treated with financial institutions, with redlining, with everything, of how hard we had to fight just to be included in home ownership. And then once you got there, you had to pay for it to be here in every way, shape, or form and be restricted. There is truly a sense of fear around the homeownership process. And we, meaning you and I and everybody else that looks like us and those who support us as a people, need to keep on working to debunk that anyone can achieve homeownership if they do the steps necessary. Another big issue that I would say is lack of education around your financial literacy, how to save money, how to manage money. I went to a all white elementary, middle school, and high school. My graduating class, there was 2 Black people, and
Oh
I was
wow.
one of them. Okay,
Wow.
that's how it was in
Wow.
this school. In order,
In Philadelphia? You still there? Uh-oh. Looked like she froze up. Oh, it was getting good too, wasn't it? Come on back, Sahaad. Come on back. See, this is what happened with live streams is you're streaming live and somebody's internet goes out or the connection gets bad and you get stuck.
can you hear me?
I can now.
I am so sorry that I froze, but I am back now. So what I
All
was
right.
saying is, no, did not go to school in Philadelphia. I was not raised in Philadelphia. I moved back when I turned 18 years old. But that's another story that we could go into details on the background on my background. But I attended an all predominantly white school, all white. And in order to graduate high school, we had an economics class, 2 of them. You had to
Hmm.
do accounting, 2 of them. You had financial literacy. You needed to learn how to balance a checkbook, how to open a bank account, um, you know, the start, like the very beginning of how to file taxes, job security, job preparedness. I had this from middle school to high school as a required part of our education. Okay.
Wow.
When you go into a community that looks like us, this is not a requirement,
No.
right? So if you are in a community, and it's not every community, but if you are in a community where no one around you, no one in your family, nobody that you know or have access to has ever reached financial success or has job security or financial security. If you've never seen that, right? How can you become that? You become the people that you spend the most time with. So if everybody that you spend time with, whether it's family or friends, has no financial education, no financial preparedness, doesn't know how to do all of these things, how can we expect you to come out as an adult and understand this process?
Right. And that's crazy because people usually, and it's strange how this happens, but people usually obtain the success and this is according to some studies within 10% of what their parents did. So if you don't see your parents doing anything, then and I always look at that this as far as renting, like people get in life what they demand.
Mm-hmm.
And if you demand that, okay, I'm not going to be a renter, I'm going to own a home, then this is what usually happens. And even dealing with the public, you'll kind of see that people's who parents rent, the kids usually rent. And also people who have homes, usually it's the parents that have homes too. So it's funny that you touched on that.
Yeah. So when once again, when we get into my background, which is another conversation, um, although the first purchase of my first home was traumatic, I never thought for a second that I wasn't going to own a home
Right.
because the people around me owned homes. This
Right.
was not abnormality, that you have a home. It was more like, oh, you bought your first house. Like, oh, that's great. What are you doing for Christmas? And you move on. In our community, it's, oh my God, you bought a house, because it's so infrequent, right? So, with the way I was raised, this is not, an exception to the rule. This is the standard.
Right. You
This is
demand it.
nothing exciting, but
Right.
that's who I was around. If I was
Right.
in a different situation and I was around everybody who never owned a home or just made poor financial decisions, I would believe that that's normal. That's
Right.
just what you do.
Right. Right. When I first bought my home, this was before real estate, when I was still a stockbroker in DC. I used to live in DC. The only reason I bought a home was because my buddy had a home. And
Hmm.
he bought a home, and I went up there and he showed me through the home, and I was just like, you know what? I'm renting. I should buy a home. And I called him up, like he implanted the seed in my brain. And I wind up buying his home.
Hmm.
Um in Baltimore, but that's the only reason I bought a home. Like there was no, like, culturally,
Hmm.
there was nothing pushing home ownership, which, if you ask me, I feel like is the foundation of generational wealth.
It is. When you look at the millionaires and billionaires in this company, I think the statistic is like 60% of their wealth is built on real estate. Now, if that doesn't scream that home ownership and owning real estate key, I don't know what does. Everybody wealthy has real estate. Find me someone who is not heavily invested in real estate in some capacity. I cannot think of no one.
And even if they rent, like you have your Grant Cardones out there, where his philosophy is to rent, but he has real estate. He has investment properties.
Mhm.
So it's just not where these people are just not, like, they don't have real estate. So it's and I think that's something, I think, with the internet, and with entrepreneurship being really pumped out there, I do feel like there's a new wave, and you have, like, EYL and channels like that, as far as the internet and YouTube. I think more people are pushing it, but I don't think it's being pushed culturally, if that makes sense.
Well, I think, well, listen, the I'll tell you why. I mean, it's very simple. When you look at real estate as a whole, and we're just going to go off of the 2020 stats. So you go to the .gov site that gives you the data for the percentages of, which demographic covers which industry. The 2021 numbers are out. So when you go to real estate, like who works in real estate, renting and land leasing, all real estate as a whole, right? And I'm going to look at
Hmm.
this chart. 82.9% of the entire industry that works in this field is white.
82%. Wow.
The black and African American ratio is 9.8. So if you want to know why there's not enough of us, there just isn't. There just isn't, by a large scale. The huge gap that we have in black homeownership, it's not a mistake, it's by design. History can tell us that, right? But how do you come out of that? You need people like you, me, other professionals that support closing the gap in black homeownership to be driven to educate, advocate, and then to serve. That's my philosophy and what I stand for. We educate for them, we advocate for them because we will need to, and we serve them as their loan officer or their realtor. I am confident that if you do it in that order, your clients walk away not only feeling empowered and that they know some stuff now, but they will then share that, encourage someone else to do it.
And
So,
and I think that's telling part of the story, because as a professional, and I'm gonna go ahead and say this,
Hmm.
As a real estate professional, I think maybe some people fall off um, because a lot of times we don't do business with each other, or somebody thinks somebody else's ice is colder. So I always see this out in the field. I'll see us with other people,
I
but
100%, I 100% agree with that statement. And, it's ironic that you say that because behind the scenes, I actually have my own, private group that,
mm,
I kind of organize, and it's all loan officers that are black. It's all of us, and we range from being very, very new, and those that are very, very seasoned, that are 30 years in the business. We have some top performers in their state. We have President's Club members. We have owners of their own brokerages. There's a variety. So there's not a lot of us, but for the ones that are there, I try to connect with everybody, no matter no matter who you work for, because
right,
at the end of the day, it's going to take more than just me as a loan officer to serve the community, right?
right,
Even if I wanted to represent every single household that looks like me at the same, if that happened at the same time, I would not be able to do this alone. I
right,
need everybody to be tuned in. And over the last 2 years, I have personally gotten to a place of growth where I need my community to embrace each other.
right.
This is not a competition against one another. This is a collective competition against the gap in Black homeownership. Period. That's it.
Right. All right. We'll end it with that. I want to thank Sahaad for coming on here. And again, we'll be doing this every Thursday at 12 o'clock Eastern time. So we'll have somebody different on next week. That's my watch telling me it's time to wrap it up. Okay. All right. So I will, if you want to reach out to Sahaad, all of her information will be um, in the description here. But tell them where they can reach you at also.
You can friend me on Facebook, Sahaad Washington. You can follow my business page, Sahaad Washington, NMLS 1446971 on Facebook. You can find me on Instagram and all social media platforms as The Mortgage Match. And as always, my phone number is everywhere. That's my real number. If you got to reach me, I am accessible. So let's be friends.
All right, y'all. That's a wrap. Until next Thursday, we are out.
Thank you.